What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 21st of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, we're not only going to be talking about the data science of Bitcoin and what it tells us about the future price, but outside of that as well, diving into Ethereum even deeper as we start to get serious about Ethereum 2.0 and how it's going to have effects on the emerging DeFi space over the next coming months. And outside of that as well, diving into other separate blockchains and news within the crypto space. So we've got a lot of things to discuss right after our quick sponsor. Our sponsor for today's episode is Bitpanda Pro. Bitpanda Pro is the secure European exchange for crypto to fiat markets. Bitpanda has been offering secure, straightforward, and easy access to the cryptocurrency market in Europe for over 5 years and wants to offer the same service to more experienced traders, users using trading bots, and other advanced clients like cryptocurrency businesses and institutional investors. With the steady addition of more and more crypto to fiat trading pairs, Bitpanda Pro has made itself a convenient, secure, and trustworthy exchange to onboard or cash out easily. Check out the link down below in the description to learn more. Alrighty, everyone, so let's go ahead and take a look across the board for cryptocurrency markets. To start here, over the last 24 hours, the vast majority of cryptocurrencies are still in a no trend scenario. However, at the same time, there are some very key outliers here. One of them being the leading and actually the top play now in the DeFi space in regards to market capitalization, and that is Comp token, or the compound token. Now, we can see here that over the last 24 hours alone, it's already up over 70%. And taking a look at it in regards to this kind of daily time frame, which is sadly all we have right now in regards to CoinMarketCap, we've seen the comp token go from down towards $64 all the way up here to $352. So this thing is taking off like a rocket. And again, I've been kind of sitting on the sidelines here waiting for this to cool down a bit because it seems a bit crazy to me. Honestly, guys, I don't know if this is very substantial, but we'll see here. Again, the circulating supply right now is about a quarter of what you're going to be getting from the overall total supply. And the key thing to take into mind here in regards to compound token is that you can only basically earn compound token by engaging with the protocol. So this has been a huge incentive to bring liquidity to the platform, and a lot of the yields have started to increase in regards to a lot of the different assets. So I just want to share with you guys real quick here, we're working right now in regards to the Digifox wallet to give people access to comp token. So if you guys are interested in that, you guys can go ahead and download the wallet, and if you message us at the customer support chat, we'll make sure to notify you once the comp token is available. So just let us know that in regards to the chat. But it's something we're working on right now. This is the cool thing about the DEXs in the DeFi space, is that this is where you can get instant access to a lot of interesting projects out there in the space. So we're working right now to get it integrated in there, so you guys have the opportunity to take a look at that if you want. Now, in regards to market cap, again, taking a look back at what we've really done here over the last 3 months since back in March. Again, taking a look back, we've had a nice rise in valuation here over the last few months, and almost in a sense kind of a flag here in the sense of valuations. And again, this is something that's got me really excited because unlike the last previous time, if we take a look back here in February of 2020 when we were at these valuations and then led to the dramatic sell-off, we actually had more of a kind of sharper correction here. Whereas over here, we're more kind of flagging in price. The volume is diminishing on the sell side portion of things, right? We're going down slightly in valuation, but the volume is generally going down. And we understand, yes, the volume metrics here are obviously overinflated 24/7. But again, there's a disparity here, and you can see it in the sense of how Bitcoin's price is moving, how Ethereum and Litecoin, a lot of these plays are. They've started to push generally sideways here as we've started to get probably a little bit more of a conservative tone post-halving event as we had that back in May. But roughly speaking, we haven't seen any kind of major sell side pressure. And again, I think that's been offset a little bit by some of the positive things we've had over the last few, last couple of weeks and stuff since we had the halving event. You had the Paul Tudor Jones event. Along with that as well, have a lot of the emergence in the DeFi space. You have a lot of things that have kind of offset that sell side and puts us in a position where we might not even get that correction. And I want to speak about that today. A lot of that has really to do with where Bitcoin's going, right? So taking a look here at the monthly chart, we're kind of on pace for where we should be, right? We had the wedge back here in the previous cycle, and along with that as well, a breakout leading to the cycle in 2017. And now we've been consolidating sideways in an even longer wedge this time around because each cycle tends to expand about a year or 11 to 13 months, roughly speaking. So we're getting to this point here now where we've got a very serious chance here over the next few weeks to possibly break out, right, as we've been talking about here throughout the month of May, potentially break out here and eventually start to climb higher, not only breaking out to higher relative highs than where we were back here in 2019 during the summer, but also eventually get back above sometime here, maybe in late 2020 or early 2021, back up to the 20K level. I think that when we break out of this wedge, guys, right, the key message here is to be ready, to just be ready for when that breakout happens, because this line of resistance is the most significant thing that people are watching. You can see how price is responding to it. Now, again, speaking to the question here of whether or not we can really expect a substantial breakout above this line after already going, from taking the dramatic lows here from the mass amount of margin liquidations across the board, and also the plus token Ponzi scheme, the world in an environment of COVID and stuff when everything was just selling off like a rock. The question here is, can we actually get the liquidity and the excitement going here and the difference in the supply and demand dynamics to actually push price higher? I think we can. So Chain Analysis just put out on one of their blogs, their Insight blog, talking about 60% of Bitcoin being held long-term as digital gold. Yep. So basically, this is a key thing to keep in mind here, right? If we're considering the supply and demand economics here of Bitcoin, which are the most important factor here, and the nice thing is that we can get a pretty transparent picture. You can't really get that with gold. You can't really get that with, I guess in a sense with stocks you can, because you can kind of see volume metrics, but you won't know if those are the same shares circulating or if people are holding them. So I think there actually are some sources where you can get a little bit of information on like the amount of holders of a stock. A lot of that stuff has really started to become prevalent and open as there's been platforms like Robinhood, but I digress. I'm rambling on. In regards to this though, when we're talking about Bitcoin serving as a digital gold, we need to understand how it's distributed. So Chain Analysis here, really pretty much the top company here, whether you guys like Chain Analysis or not, it's the top company here in regards towards analyzing blockchains and being able to actually strip realistic data from it. And the thing I like about this is that it doesn't overcomplicate it. It shows generally how much they estimate is around investments in Bitcoin. So these are long-term holdings in Bitcoin that are held over a long or prolonged period of time. And outside of that as well, you've got lost Bitcoin, trading Bitcoin, and Bitcoin that's left to be mined here. And this simplifies it to a T, right? So we obviously have the near 4 million Bitcoin that have been lost here. We have the 3.5 million Bitcoin that generally are circulating around exchanges or being traded. So this equates for something that we usually don't hear in regards to looking at the HODL waves, which I will bring up in just a bit. Considering the fact that there is some Bitcoin, even though it may not be moving and stuff, that's just simply, they're being traded, right? It is still moving around and circulating in the market. So the key thing to take away from this is that we're assuming that right now, 11.4 million Bitcoin here, right, are basically being held as a long-term investment. They're not going to be available to be sold in the market until we get probably into a period where prices are much higher and where we have much more volatility, much more liquidity circulating, and therefore, again, we start to see a decline in the HODL waves. We see that going into the emergence of the new cycle. When we break above those key highs for the previous highs, so in this case, it'd be 20,000. Once we break above there, that's when people start to take profit, right? Because, and there's a psychological reason for this. There are a lot of people who bought Bitcoin at much higher levels, and what they're doing is they're waiting for that moment as a long-term investment that they can actually be positive on their net position. This happens a lot in regards to traditional markets, such as gold, such as equities. And it's an important thing to keep in mind here that when we break above those psychological levels, right, we usually have room to continue on to the next cycle and go on towards, in the case of Bitcoin, as a small market, exponential new highs, where Bitcoin from 20K can go to 40K, 60K, 80K, 100K, even higher than that, right? We have a conservative estimate of $100,000 in November of 2022. So definitely a few years here from now. And again, another thing that Chain Analysis had basically brought up as well is that about a third of the Bitcoin, 6 million Bitcoin in the current existing supply, is being used, stored in basically shared custody. Shared custody meaning in this case that you're utilizing multi-signature authentication to basically send transactions. So in this matter, pretty much 6 million Bitcoin, a third of all Bitcoin, is being held up in a system where there's not only high-level security serving as a custodial solution, but that it's likely going to be held as long-term investments, right? These aren't Bitcoin that are circulating around. They're just basically being held long-term under high-level security. Now, we can see here as well, taking a look at the HODL waves here, the longest term time frame. Again, just to explain this chart here, you can see that we've got our different age bands here. And basically what this is pulling, again, for those who might be seeing this for the first time, it's taking the unspent transaction output basically the last time a Bitcoin has moved or been spent or exhausted from an account into another address. And it's taking the age of those UTXOs, or the unspent transaction outputs. And we can see here that over 21.65% of Bitcoin has not moved for over 5 years. And the other bands as well, from 3 to 5 years, as well as the 2 to 3, this has really been dominating a lot of it here, have been really starting to take over the page here. If you take those top 3 age bands, you can see that roughly speaking, as time progresses, again, over the last few years here, since 2018, we've been expanding those longer term time frames. So it's important to see that kind of divergence or that change over time. And what it's reflecting in this case, it's reflecting that people are holding, they're not selling long term. And even if you want to just take a look at the short term, I like to take a look at the ScalpX index. And this is basically basically a website that tracks a lot of the derivatives platforms. It checks things, for example, like market order flow, the social index, what people are generally talking about right now, the general market sentiment, a fear and greed index. And we can see here that right now, we're more in fearful territory, right? So again, what's the general strategy? You generally buy during fear, right? Again, I can't tell you guys what to do. I'm not recommending it. It's not direct financial advice. I'm just letting you all know, again, I've been holding my positions through this because we're up at this continuous range here that has been tested multiple times. And one thing that I think is really interesting, I saw this brought up by my good friend Quentin from Young and Investing. And the thing that he brought up that I really liked was how, for example, back here in 2018, how Bitcoin continuously used 6K as support for over nearly a year and eventually had a breakthrough down to the downside. He sees what's going on right now as a potential inverse. So basically speaking, right here around this 10K level, he believes that the multiple retests are eventually going to lead towards a massive breakout to the upside. So whereas, for example, back here, multiple times tested as support, and eventually once we got that break, became a massive sell side move to the downside. He believes that multiple points of similar resistance are going to call for an opportunity to have a massive breakout in a very fast period of time. And I think that's a very interesting theory here, because if I look at the chart of Bitcoin, just keeping it simple, guys, right? Just looking at what's going on here, more on kind of the daily time frame, right? This is generally flagging price action. You can see both times around here, the kind of volatility and quick sell side action that followed a lot of the peaks here. This is much more substantial, right? We can see that, again, this isn't selling off like it was back here in March. It's just slowly kind of pulling back here. And in fact, the volume is very distinct from what happened here on the general uptrend. We had a lot more upward candle days here on the volume versus what we have over here on sell side days. So that's the kind of signs I want to see. After that, I want to see follow through in volume. Now, speaking to that, I want to talk a little bit about Ethereum as well, because Ethereum is just as much a part of this equation as Bitcoin in regards to the excitement around DeFi, the applications that are being built on it, as well as the improvements to the core chain that will bolster not only DeFi, but also enterprise blockchain. So Ethereum 2.0 has been talked about for a very long period of time. The implementation of features such as proof of stake as a replacement for the proof of work mechanism. Instead of doing countless amounts of mining on the network through GPUs on computers like mine or a computer that you might own, instead we would have basically proof of stake where you have to stake up to 32 ETH, and therefore you get to run a node and actually help in the consensus process of the Ethereum chain. Outside of that as well, there's also the implementation as well of sharding, which is going to actually fractionalize the consensus mechanism and actually the actual keeping up of the ledger in this case for the Ethereum blockchain amongst a variety of different shards or different participants. So this is an interesting set of different upgrades to the network here that are not only going to help with scaling, which is a big issue right now in Ethereum. We need to get some scaling solutions. But along with that as well, it's going to kind of broaden and probably open up the opportunity for a lot of people to participate without having to know how to, set up proper GPUs and do all the mining that, has actually been relatively stagnant on Ethereum over the last few years as proof of stake has been announced. So I'm very interested to see proof of stake, not only because of the energy, the energy efficiency of it in this case, and to see it on the second largest blockchain, just to see what happens here, as we're still very early on in regards to this space. But again, to see these scaling mechanisms come out at a time where DeFi is demanding very high throughput on the Ethereum blockchain. So to try to take a look at this in an open and honest way here, and to really think about the next few months ahead, is ETH 2.0, Ethereum 2.0 going to be positive for the broader DeFi ecosystem? And quite frankly, guys, to put the answer simple, I have to say yes, because it's not only very easy to think about some of the benefits that Ethereum 2.0 is going to offer, But it's very difficult to think about the negatives that this could really bring to Ethereum as a whole. And I'll go ahead and explain why I believe that. So first off, we need to talk about the issue of scaling here, right? So again, this is an important question, right? How urgent is Ethereum 2.0 here in the short term? Well, I would say that right now, a lot of people are eager for a scaling solution to the Ethereum network. Right now, gas costs are pretty high. In fact, I think if I remember correctly looking at it last, they're at their highest level since back in around the summer of 2018. And this is very difficult for a lot of DeFi service applications or for the users themselves utilizing these applications who are paying the gas cost, right? So again, this is something that a lot of companies, including ourselves at Digifox, we're keeping in mind as we settle things on chain, right? So we're working right now again to explore not only DeFi as it scales into Ethereum 2.0, but also a lot of the temporary layer 2 solutions. So this is something that can provide some relief in the short term. Things like Matic, Scale Labs, Plasma through Omise Go network, right? There's all kinds of different solutions as well as Loopring that are coming out to compete and provide that best scaling solution on the market. And I think that this is interesting. You know, it's so exciting to see many different approaches. Whereas, for example, on Bitcoin, you basically have had discussion of Lightning Network for the last few years, and we still don't see an adoption of it. Whereas, for example, you see wrapped Bitcoin coming over to Ethereum as a quick solution to settle on-chain transactions for Bitcoin and interact with DeFi applications. And on Ethereum, a multitude of different approaches for scaling. So I think this is really fascinating to see this kind of short-term innovation meeting to the market need. It really speaks to the nature of Ethereum. But again, in the long term, you're going to want to see core on-chain scaling, and there's a reason for this, because eventually you have to step off layer 2. Eventually you want to settle in regards to the actual main chain. That's the same with Lightning Network, and it's the same here with any layer 2 solution in regards to Ethereum. So again, we are going to want to see sharding or some form of scaling implement so that on the core chain, even if it means involving still paying a slight fee, that those fees are minimal and that you can get your transaction confirmed in a quick manner. Those are two things that are very, very important for Ethereum to continue supporting decentralized finance. Now, one thing that's important to keep in mind as well in regards to DeFi is the staking element as well. This is the other second key aspect outside of sharding. And as we talk about in regards to the sharding technology, in regards to staking, right, is this going to have an effect on DeFi and the yields around Ethereum? And it's actually a very good question. I would say that it's generally not going to have an effect on the kind of yields you get on ETH and DeFi. And the reason why is because right now, if you're using things like Compound, if you're using DYDX, all these decentralized lending pools, you're probably not earning too much on your ETH right now. Now, if you're using something like, say, Celsius Network or more centralized lending pools where there is custody of the funds and they're able to balance the books for lenders and borrowers, then in this case, you usually can get a yield. Now, in that kind of scenario where, for example, either you're making nothing on your Ethereum or practically nothing, or if you're making maybe 2, 3, 4%, what's going to happen here is that the market dynamics will change to whatever the yield is for staking. So to put it simple, let's say, for example, you have to stake 32 ETH to start a actual ETH node. Let's say that you earn 3% on an annual basis. This means that your ETH supply in your node is going to grow by 3%, or you're going to basically get a return of 3% ETH at the end of the year. That means that the DeFi pools, through market efficiency, will probably bolster that yield inside what they're already paying. So if you put it in Compound, you're probably going to earn about 3%. Because if people realize that there's an arbitrage opportunity, there's an opportunity to go borrow ETH in this case on the market, right? And basically go stake it. So as the borrowing demand picks up, on the lending side as well, the yields will increase as well. That's how Compound works. So DYDX and a lot of these other decentralized lending pools work at the moment. And it's just generally how pretty much any lending and borrowing market works so long as the rates are competitive, right? And so long as people are fighting for that best yield. And again, we're going to probably see that here in regards to Ethereum. So I rambled on enough about that, guys. But I want to talk a little bit about the price here, right? Because the price tells a lot of story here. Right? We've been building this long-term wedge since here at the start of the year. DeFi has become more and more relevant here over the last few months. I know I've been beating it like a dead horse, guys, to be fair, because I love this technology. I can't express, as much as it is experimental. I've seen some people comment this before, and I listen to you guys. I really do, whether I get back to replying or not. I'm busy a lot of the time, but I do listen to you guys, and I understand that some people are skeptical about DeFi as a technology. But if you care about an actual utility for blockchain technology and cryptocurrencies in the long term, outside of just holding digital assets, this is it. I mean, this is the space right here. And I have to give credit where it's due. Ethereum is leading the way. NEO, Cardano, a lot of other blockchains, they're coming up to step up to the plate here, and they're bringing a whole suite of developer tools and things of that sort to compete here. And we'll see what happens here over the next few months, right? But Ethereum has been leading in this sector. It has the largest developer community. We're starting to see actual smart contracts that don't have constant bugs like they did years ago. We're starting to refine our understanding of the Solidity language and now make sure that we can actually build systems that work and plug and play with one another. And again, with applications and wallets like Digifox, we're now actually making this so everyday people can use it, right? So I think that this is the fascinating portion. We're just seeing the cusp of this. It's like looking at the internet back in the early 90s. Just imagine what this space is going to look like in 5-10 years. That's the moment that I'm looking forward to. I think there's so much potential in this space. And you can see it here in the sense of how it's reacting in regards to price here, right? From a purely technical perspective in the sense of price, again, wedge in price here, we break above the line of resistance here, make it support, and it looks like now, after probably the next few days, the next few weeks, this is going to start picking up, and this is compared to Bitcoin. This is exactly what we're not only looking for Bitcoin, but what happened in gold markets when we kicked off in the recent rally. So very, very fascinating stuff. I would not write this off, guys. If you take a look here at the broader crypto market, right, just taking a look at my list here on the side, you can see Kava, DeFi play, leading the market. Lend, for example, that has been on an absolute killing over the last few months since back here in August and September of 2019. This has gone from 26 sats to 1,500. It's truly incredible. Ren as well. Again, a lot of people sold off after mainnet. I said, guys, focus in on the technology. Focus on the long-term potential. This isn't some kind of hype story. This is a real technology that works, that can actually bring all types of cryptocurrencies onto Ethereum in a non-custodial way and allowing people, or actually storing your crypto in a non-custodial way, and allowing people to actually trade different types of assets here on the Ethereum blockchain through DeFi, bringing in all new types of liquidity into the space. And I think this is just so fascinating. There's so many cool technologies. I know I get all giddy about it, and I probably seem like a total nerd, guys, but I'll admit it, I'm a nerd for DeFi. I think this is so interesting. I mean, there's so much potential with open finance. And the cool thing about it, and this goes with Digifox as well, if we're not building the best experience for a user, the user is going to find the best experience out there. That's the key thing here. This space is highly competitive. It's user-centric. It's focused on providing the best experience and the best opportunity to anyone. Doesn't matter where you're from. You can use Compound. You can use Kyber. It's fascinating. It's a very revolutionary time, and it's going to make us rethink about how finance as an industry works in the long term. And in the sense of protocols, and upgrades, guys, Cardano or ADA is coming out with a big one as well. They've got the Shelly upgrade inbound here in the next, coming few weeks. And again, this is something that's going to provide a lot of optimism here for the Cardano blockchain. Now, in the sense of the actual benefits that Shelly is going to provide, again, as we take a look at the surface level kind of benefits of ETH 2.0, in the same context here for Cardano, there's going to be a big emphasis here in regards to switching over to a new consensus mechanism for Cardano that, again, makes it as decentralized and trustless as possible, and also puts an emphasis on delegated proof of stake here, the ability to actually have a stake in the network, but allocate it towards someone that you actually want to represent you in the sense of meeting that consensus, right? And they have over 200 different pools that are operating already in regards to the testnet for the Shelly upgrade. So I think this is really fascinating here. I think there's a lot of potential over the next few months for Cardano if it keeps pushing out these updates to possibly take the center stage and be one of the leading protocols. The thing I like to see here, if I take a look at the weekly, or if you want to take a look at the daily, right? We had a pullback in price, nearly back down to previous resistance, nearly making it support, bouncing right back up here. And it seems like the market right now is still holding up the vast majority of gains here, going from around 430 sats all the way up to 849, nearly double where it was just back here in March of 2020. The protocol wars, which we talked about years ago back in 2018, are finally afoot. It took a little bit longer than we thought, guys, but we're at that point now where the blockchains are going to start competing. NEO coming out with a whole suite of developer tools, as well as progressing towards NEO 3.0. Cardano looking at Shelly and future upgrades. And along with that as well, Ethereum leading the way in the DeFi space, as well as maintaining the largest developer ecosystem. So who's going to win it, right? You know, it may be that there's a lot of winners in the long term. That's the probably likely scenario or probable scenario that's going to happen here over the next couple of years. But I'm interested to be in this journey with you guys. I'm interested to see if we have yet to even see some competitors come into the spotlight. You know, there's a lot of different players out there that are still working behind the scenes, waiting for that opportunity to come out to the market. And that not only means that there's investment opportunities out there and trading opportunities that we're going to be watching for here on the channel, but outside of that as well, an opportunity to witness one of the greatest technological revolutions we've seen in the last few decades. And I'm excited to be here with you guys for it, okay? So I've rambled on enough today, guys. You've tolerated me enough. I wanted to share with you guys as well, again, as we are in that extended tax season here, to keep in mind that you guys should definitely check out TaxBit. Now, if you haven't already, TaxBit is an all-in-one tax platform for your cryptocurrency activities. You know, for example, if you have multiple exchange accounts, you have you know, money, for example, in things like Celsius or Digifox. In this case, TaxBit can be a great application to utilize to plug in all of your information, and along with that as well, be able to get all your tax documents generated all at once, ready to be sent off to the IRS. So again, I recommend you guys check out the link down below in the description. Make sure you check out TaxBit and see the tools that they have. You can actually plug in everything right from the get-go, and then you can actually pay and stuff once you've actually plugged in all your tax documents properly. All right. So it's very simple, guys. Definitely check them out. That all being said, have a great day, everyone, and I'll see you all in the next one. Stay tuned.